Hello everyone, welcome to another video. I hope you are ready for the next dose that I have to give you on how to trade profitably using my stuff. All right. So in today's video, we are going to be talking about refining key levels with structural inducement. Now we will see how we can do that on a lower time frame as well. Okay. So first of all, you need to understand that in order to refine, right? For example, if we have, let's say, a breakout structure like this, we know that this candle over here, that's the one that's going to be induced, right? So basically, we're going to get something like this, okay? So what you need to do is you need to find a key level at or below this structural inducement, okay? Then when you go to the lower time frame, yeah, when you go to the lower time frame, you're going to face that same fractal. Basically, going to come down, then we're going to reverse and do that. So in this case, what you're going to do is you're going to look at that inducement, okay? You're going to see that inducement, and you're going to pair this inducement with the IFVG. There. There's two levels of refinement. One is the main macro refinement, and the other one is the micro refinement. Okay, so I'm going to keep this one really fast, quick and simple, quick and easy, right? So I'll take you guys through all of the Bitcoin setups that happened yesterday. So yesterday, what we can do is we can remove the macro projections and we can remove this. Okay, so yesterday, if I take you guys back to replay mode, okay, and if we come all the way, uh, 1 second, all the way here, right? We have to see one thing, right? We know that these pink color boxes, they are the hourly opening range that I taught you guys. Okay. Now I need to see inside of this hourly opening range, did price hit a key level? Was there a key level that I could have used? Here. Okay. Now we go back. Now we can see that this was inside that. Yeah. When we opened, we went inside. So that means there's no need to sweep this high. No need. No need to sweep this high. So now what you can do is you can essentially you look for a structural inducement. So we can see that here we have a break. This candle, that is a structural inducement here. Yeah, we know that. But let's take it another step further where we must check the different time frames, right? So on 15-minute chart, we have this one. So in this case, what is the structural inducement? This one. Okay. So now what we can do is we can go to the 5 and we can check for an inverse fair value gap, which we have right here. Okay, but in this case, you're not going to be interested in the entire thing. You're going to be interested in the portion above this. Okay. Now we go to the lower time frame and just check, okay, is there anything I'm missing? Maybe there's another one that I'm missing. Yes. I'm interested in the first inverse fair value gap that happens. So that is this. I always said that, right? The first inverse fair value gap that happens, that's that. So we hit that structural inducement done. Now for our entry, you can enter here directly, stop loss above the high, or you can employ the same principle here, reaction, close, inverse gap. You're going to be entering here, stop loss above the IFEG high, so which is that, right? And what you will do is you will then go for the projections, which is take the highest high of the day, the manipulated range over there, and you will target 3 standard deviations. Yeah. Okay, that's a 17 RR trade, as you can see. So it's very important. The only way you're going to accomplish this is if you utilize the hourly opening range properly. Okay. So now watching this here is the same story, right? First of all, before talking about the same story, we need to check and see what and how did this entire move down happen. Now, remove the entry that we just did. Okay, remove all of this for now. All right. This one, if you guys remember in my zero drawdown video, I told you guys for this week, yeah, this is the inducement, meaning here the structural high, the candlestick structure, this candle led to this high. So this low was broken by this bullish candle. So I said, okay, you know what? We will go above this one here, and this one here, of course. And then as the week progresses, let's see whether we will get the sell-off, which it happened. It's there, proof is there, everything is there. All right, so think about that for a second. Okay, so are you done pondering about this? Because I did tell you guys this, right? I did. So now we know that, okay, if this is the inducement, then for the weekly time frame, I need to look for a key level above this high. So what's that? This one. That's where price reacted from. Okay. Now let's take it a step forward, step further. Daily. On the daily chart, what do we have? We have price taking out this high here. Okay. And that's the structural inducement. Okay. Price takes out this high. Okay. That's the this guy here, this low. That's the structural inducement. Okay. Now I am looking at on the daily chart, I'm looking at any key level below this one. Here, below this one. All right. So what would that be? What would that be? Below this, what's the key level? We have this one that gets inverted. See, it's a bearish level, gets inverted to being bullish. So we have this. Okay. What else is there? If it goes just if it digs just a bit deeper, then we have this. So those are the ones I'm going to be stopping with for now. Right. Now if we check what price did after that, check the daily chart. See, see that? How it went into that key level. And this is where we are right now. Now, if you look at the price action now on the 5-minute chart, that's the level that I've been calling you guys out to take a look at. Here, these ones. Okay, these ones. Because you see, this one open came directly into key level, IFVG in macro timing. So when the macro starts and price is up over here, why? Of course, it will come back down, right? Because it isn't starting at a relevant point. So macro has just come to a relevant point. Okay, let's see whether it can go up. Because for now, the daily bias is bearish. So we need really intense volume to push higher. Okay, now you can see on the right hand side, the trade easy algorithm is giving me buy signals everywhere. Here, buy signal, here also buy signal. Let's see if it works out. Okay, now that is that. So when you're looking at a key level, this is how you're going to be looking at it. This is how you're going to be refining. Now, to show you why I am picking this IFVG, it is because if you look at the 15-minute chart, right? We have no proper structure. Yeah, the initial structure that we have belongs to this candlestick structure here. This high led to this low. So this candle took it out. So this candle also took out this high. Fine. So we know that this is our inducement point. So on the 15-minute chart, I can't see anything, right? Because look, it's all nothing. It's nothingness. So I had to go to the 5. So on the 5, below this red line, what is my what? What is my IFEG? IFEG is this big fat one. Okay. Why? Because that is the first IFEG that formed in this run up. Okay, see here, react, run. So that's the first one. Okay, like so. That is the first IFEG that formed. Therefore that's the one I'm interested in. Okay, so keep that like that, and let's see if it works out or not. It is a risky position because we are below the Asian range. I don't like it, but algorithm is giving me seek and destroy, so chances are we could go higher the entire day on Bitcoin. Okay, so if you get a reaction from a daily point, okay, if you get a reaction from a daily level, price is going to seek 4-hour session highs. What do I mean by 4-hour session highs? I don't mean just like this, those individual highs. No. Price will seek 4-hour session swing highs, meaning this one. So this is indeed going to give us a buy. It's going to give us a buy directly to the Asian high. All right. Now, likewise, on the weekly chart, we saw we're getting a weekly reaction. Yeah. So now in the weekly reaction, we are targeting daily levels. So then we're targeting a daily swing low that belongs to a trading session. So already done here. See, there, boof, came directly to daily swing low. Not just this one came directly for this one and then stopped. Okay, you can see this happening everywhere. For example, if you go to the weekly again, okay, not weekly, let's go daily. There's nothing on the weekly. Daily, we can see that, okay, here, there, and here price reacted from this key level there. Can you see that? Okay. So this one is suggesting that when price is going to react, we should react and see price going above 4 hour highs, like proper 4 hour swing highs. So that means from this point, looking at the left side of the curve, price is going to target 4 hour swing highs. So that doesn't mean that we're going to target one and then that's done. No. If anything is a stacked liquidity pool, of course, entire range is going to go, right? So how can we determine if this is a stacked liquidity pool or not? Well, we know that if we have a reaction like so, at least inside the range, then it becomes stacked. So that itself is a target. Here also, here we come hit this level, boom, now that is stacked, right? So then, Sean, you said price you're going to target a daily low, daily swing low. We already targeted that. And what next? Well, on the daily chart, is there anything stacked over here? No, not yet. Nothing is stacked yet, right? Because look, if anything has to be stacked, then it should do that and then that. Over here, there's nothing stacked for now. See, there's no reaction with the swing low here, not yet, unless this is the one. Then we go like that, and then we go like that. Okay, so far nothing is stacked for us to target daily lows properly. So this was enough. Okay, this was enough. So yeah, now let's take a look at gold, give you guys a better understanding of this. Right, so on gold, if you look at the weekly chart first, this should give you a good understanding of what's happening. We can see that yesterday price dumped into this this level. Mhm. So it's a weekly level. So then when a weekly level is there, price is going to target daily swing high. What's that here? This sorry, not this one. This one. Previous day high. Previous day high and also previous week high. It is as simple as that. Yeah. Can we say that, okay, is there anything stacked over here? Is there anything stacked that we can use? Not really. Not yet. I mean, because why? Here we have this one. Okay, we have this also. Price came and mitigated. But for this to be stacked, we must understand that this reaction should have made a new low. It did not. Yeah. So we cannot say that I'm expecting a massive run up here. Not yet. Okay, not yet. But now take a look at this. Go to the 4 hour, sorry, 5 minute. Now the 5 minute chart, just to make you guys understand what I was pointing towards in the public Telegram group, and I sent a message to you guys earlier today. I said, okay, open up your charts on gold and find your 3 hour key level because there's nothing on the 4 hour. 3 hour is here. So on the 3 hour, what is the level here? We break. Here's the key level, which becomes an inversion. Okay, price hits that. Now we need to understand what time is it hitting it at, right? What time is it hitting at? Is it happening inside of the London opening range? Yeah, here. See that? Happened. Therefore, I can try to go along inside the macro. So inside the macro, we need to consider the same thing now. You see, whatever approach you are taking on the higher time frame, you are duplicating that or replicating that on the lower time frame. So took this high out. Okay. During the macro is here within these two orange color lines. And we can see that we took this also out. So which candle took the high? This one and this one? This one. And this fellow took out this one. So relative to the two, where is the IFVG? Yeah, that's the first IFVG that formed. The first one. Okay, that's the first one that formed. Right here. See that? Okay. That's the first IFVG that formed. Right? That's why stop. I entered a bit late. Actually, no, I entered here, but the spread widened up a bit. But stop loss below the IFVG candle. Within the macro, it works perfectly. Okay. So when you have the macro, and when you are outside of the macro, so let's say this big guy is outside the macro, this is inside the macro. So when you're outside the macro, there's a lot of room for price movement. When you're inside the macro, there's not a lot of room for price movement. It has to hit and it has to move, right? So that means when you're inside the macro and price has not hit a key level, price has not done the inducement, it will do it first and then it will move. To show you, check. Here, this one. Second. Okay, okay, here. There. See? Macro begins here, there. Inducement is down here. Key level already hit, okay? Calm down and then we go, right? Calm down, then we go. That's what. That's all. Okay. So with that said, guys, as you know, I am running the boot camp. Boot camp is going to happen most likely, I think, fourth week of Jan, last week of Jan, or maybe the first week of February. So if you are interested, please do join because this is an annual event. And everything that we're going to learn is we're going to learn amplified versions of what I'm teaching you on YouTube and maybe one or two one-on-one topics as well. So if you are interested, there are 10 spots. And yeah, you can definitely come and we can definitely have a good time over there within the boot camp. And Trade Easy is open for everyone. $3, sorry, $39.99. So it's going to be basically $40 per month, right? Buy signals, sell signals, uh, statistics over here, you name it, anything to make your trading easy. I see a lot of people trying to copy me, but they cannot copy what I know. So this is as close as you're going to get to an actual algorithm. And yeah, with that said, I'll see you guys in the next one. Like, comment, and subscribe. Good luck in good trading. Bye bye.